Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LONKING interim report. LONKING Holdings Limited offers a diverse range of businesses and services, including manufacturing and distributing construction machinery such as wheel loaders, road rollers, excavators, and forklifts, sale of various types of construction equipment, including plus wheel loaders, plus excavators, plus forklifts, plus road rollers, plus skid steer loaders, plus part center services, finance, leasing of construction machinery, to customers' financial investments in various sectors, distribution of oil products. The skyrocketing stock price of LONKING, a year of growth and optimism. LONKING Holdings Limited, 3339, has experienced a remarkable surge in its stock price, increasing by 91.61% in the past year. Several key announcements have contributed to this substantial growth, showcasing the company's resilience and potential for future success. A significant net profit increase for HON 2025 was announced in July 2025, with LONKING expecting a 29-45% rise compared to the previous year. The confirmed results showed a 38% increase from HON 2024, with earnings per share (EPS) rising to CNY 0.15 from CNY 0.11. Strong August 2025 excavator sales also played a crucial role in boosting investor confidence. With a 12.8% year-on-year increase in sales, including exports, the construction machinery industry's steady performance was reinforced. The increased holdings of major shareholder, LONKING and related parties, further signaled strong confidence in LONKING's future prospects. These positive developments collectively fueled investor optimism, leading to a substantial increase in LONKING's stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by increased sales denominated in currencies other than the functional currencies of operating units. Construction machinery revenue increase, particularly in mainland China and outside mainland China, strong demand for wheel loaders, excavators, and road rollers, government grants and income from sales of scraps, recovery of domestic market demand for Chinese construction machinery, and growth in export product series. Revenue decline is primarily driven by decrease in forklift sales proportion due to intensified competition in the domestic market, declines in sales in certain regions, including North, Southwest, East, and Northeast regions. Net income experienced a significant fluctuation between 2024 and 2025. While it increased by 37.83% overall, one segment saw a staggering decrease of 92.8%. This disparity highlights the varying performance across different segments. Profit margins also underwent changes during this period. The gross margin rose by 1.82%, while net profit margin increased by 2.74%. EBITDA margin also improved by 1.52%. However, not all segments shared in this growth, as some saw a decline in gross profit margin, particularly in the forklift segment. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash flows from operating activities have increased by $263,439 from 2024 to 2025, reaching $579,683. This increase, combined with the net cash inflow of RMB 580 million and a net increase in cash and cash equivalents of RMB 12,740,358, confirms that the company is generating positive operating cash flow. The company's debt level has undergone significant changes. Initially, the total debt decreased from RMB 2,011,628 to RMB 1,662,760. However, non-current liabilities increased by RMB 28,764. The gross gearing ratio also rose from 30.8% to 34.5%. On the other hand, interest expenses have shown a notable change. In 2024, the company incurred an interest expense of -20,518, but in 2025, it paid no interest and instead generated net cash flows from financing activities of RMB 20,000. The company's financial performance varied across different segments and regions in 2025 compared to the previous year. The segments that performed well were financial investments, sale of construction machinery, and excavators, which saw significant increases in revenue and profit before tax. On the other hand, sale of finance leases, forklifts, and components underperformed, with zero revenue and negative profit before tax for finance leases, and declines in sales for forklifts and components. In terms of regions, outside mainland China and export markets performed well, with a growth rate of 11.3% in revenue. However, the North, Southwest, East, and Northeast regions experienced declines in sales, ranging from 2.8% to 6.4%. Management is optimistic about the company's outlook, attributing strong gross profit growth to a combination of factors. Key drivers include enhanced cost efficiency, operational efficiency, and manufacturing efficiencies, as well as favorable product mix and effective supply chain management. These improvements are expected to contribute to continued success in the future. The company has a history of paying out dividends to its shareholders. This is confirmed by two separate references in the financial summary, with page 7 explicitly stating that dividends were declared and page 34 further confirming this action. That concludes the financial summary for LONKING. Feel free to comment below, and I will be happy to answer them when possible.